Welcome to this QuickBooks 2019 tutorial for beginners. My name is Matt Holquist with the QuickBooks University, and in this video I'm going to go through how to record the purchase of a financed asset. All right, this causes a lot of confusion for people, and so I want to clear this up and how to record this in QuickBooks. There's generally two ways that we're going to do this. Okay, you can do either way, whichever one you're more comfortable with. All right, and but what typically happens is, let's say that a business owner goes and buys a business vehicle, and they purchase this vehicle and they put just part of the money down. So they write a check out of the business for part of the purchase price, but the rest is financed. Now, what typically happens is that check is recorded in QuickBooks and it's put to a fixed asset. Okay, so a vehicle or whatever it is, equipment. And the only thing that gets recorded in QuickBooks is a down payment, okay? And that's incorrect. We want to make sure that we get the right assets on there and the right financing so that we have the accurate financial statements. Okay, so in this example, what I'm going to do is we're going to assume we're buying a vehicle for $22,500, and we're going to assume that we are putting $3,000 down. Okay, so there's $19,500 of financing. This is a loan that we're going to have to pay in the future. Okay, now the first way that I want to show you how to do this is we're going to make a journal entry. Okay, so if we go to company, go to make general journal entries, we are going to record the purchase and the financing of this through a journal entry. If you're not familiar with journal entries, this can get a little bit confusing with debits and credits and things of that nature. And so I'm going to show you another way to do this as well. Okay, so the first thing we need to do is we need to choose the fixed asset account. Okay, so if you do not have a vehicles account set up, you would set up a fixed asset vehicle account. Okay, because a vehicle is a fixed asset. So we're going to choose this and we're going to debit the full purchase price. Okay, not the $3,000, not the financing, but the full purchase price. Okay, so this amount in this example is $22,500, and we can type in the memo to record purchase of, I don't know, just say vehicle. Okay. And just so you know, there is a fixed asset area in QuickBooks where you can record specifically the fixed assets. I believe I have another video on that that allows you to track the fixed assets. It doesn't record it in your books, but it does allow you to track specific assets in QuickBooks. Okay, but for this example, we're just going to walk through how to record this. Okay, so the next line that we need to do is the financing. All right. So now you're going to look for a long-term liability. Now this sample company file has loan vehicles and the various ones. Okay, so if you need to set up a new loan for this vehicle, you can see how they have it broken out here. We're going to say this was a van. Okay, so we're going to say loan vehicles van. Okay, now this amount is going to be the amount of the financing, $19,500. Okay. Okay, now, because this has to balance, a debit and a credit, a journal entry, the two amounts have to balance, they have to equal each other. There's the leftover amount of $3,000, okay? Now, because this was a check, we're gonna put this to the checking account, okay? And this will show up in the check register as an amount that came out of the checking account for $3,000, okay? And over here, you can put check number, etc., whatever you need to do. Okay, so this is a quick and easy way to record this entry. So if I hit save and close, we will now have $22,500 of vehicles on the balance sheet. We'll have this loan on the balance sheet, and this $3,000 will come out of our checking account, and then we can reconcile just like normal. Okay, so let me hit save and close. I don't have any classes on there, but if you need to class it, you can do that as well. Okay, now the second way you can do this, and sometimes this is easier for people, but this can also be a little bit confusing, is we want to go to write checks. Okay, so we simply go in and we're going to record the check that was written to this car company. All right. All right, so we're here on the check screen, and let's assume the check number was $492. You're going to put in your check number, you're going to put in the date, and we're going to put in the car company. Okay, so the dealer, whatever it is. All right, so you may need to enter them as a vendor. right now, I'm going to choose a vendor that is not a car company, but we'll say Hamlin Metal. Okay. You have unpaid bills. We're going to just write your check. Okay. All right. So in this case, we only wrote a check for $3,000. So that's what we want to record. Okay. So we're going to put in $3,000. And in the memo line down here, you can say purchase of new van. Okay. So down here, it's just going to show $3,000. Okay. So this is where some confusion comes in, is how do you record this? Well, a lot of people will just put this straight to vehicles. Okay. But that's not the correct way to do this. Okay. So what we want to do is we do want to choose vehicles. So fixed assets, vehicles, and we want to say 22,500. Okay. All right, now I know you're saying that, well, this doesn't match up here, but bear with me here. Okay, on the next line, we want to choose the loan account. Okay, so loan vehicles van, and you'll see it automatically does negative 19,500. All right, because it needs to balance to this $3,000, and you can see the expenses $3,000 right here. All right, so now this will, on the books, record the loan for $19,500, the fixed asset for $22,500, and then we're writing a check for $3,000, which will show up in the register. And this will record it the same way as a journal entry. Now, some people prefer to do it this way because you're actually recording the check and the check number, and it makes it a little bit easier to track. Okay. Some people prefer to do a journal entry. It's really up to you. It's going to get you to the same result. Let me just save and close. I don't have any classes on here, so it's going to give me this pop-up here. But let me just show you. I'm going to go to the balance sheet, and let's see if I have this up here already. Okay, so if we go to the balance sheet and we look under vehicles, okay, and let me put in the full month. All right, you're going to see the two entries here. The one I did as a journal entry, and you can see it says general journal, and the other one that says check. Okay, purchase a vehicle, 22,500. So we've got both of them there. Now let me go to the loans, and you'll see loan vehicles van. Okay, again, let me do the full month to show you. Okay, now you'll see both loan entries, 19,500 for each. Okay. One is a journal entry, one is a check. All right, so now let me show you here. I'm going to go to the, let's say to the check register here. All right, and you're going to see, let's see, we've got one right here, which is the journal entry for $3,000. Okay, and then we should have a check $492 for $3,000. Okay, so again, both are getting you to the same result. You can do either one, whichever one you're more comfortable with. And a lot of people starting out with QuickBooks are more comfortable with the check route. But when you do the check, you need to make sure that you record the full amount of the purchase and the full amount of the loan, and then the check amount. Okay, any questions whatsoever, leave a comment below. Happy to answer your basic questions. Also, head over to the QuickBooks University. Got the full training in QuickBooks over there, QuickBooks Desktop, QuickBooks Online. And also, when you purchase the tutorials, you become a member. And as a member, you can ask personal questions. I look forward to helping you out over there. The website is qbuniversity.org.